Hi again. I'll try to get the right problem this time. I wanted to show you one more example of the four-step close, and this time with the normal net income that most of them have. This is not one of the problems on your homework assignment. It's not a lab problem, but it's like one of your lab problems. It's P430A. It's on page 227. And I'm just going to do requirement 4, the closing entries. Okay? This does have an adjusted trial balance. I made sure I had the right problem this time in front of me. Sorry about last time. And I'm going to go through the four-step process just that they're asking for in requirement 4. So this one has, this is for Boston Irrigation System, and they have revenue of $74,500. So we want to make that 0. So this is step 1, right? Close revenue to 0, or to income summary. You can say either one. So actually get close to income summary. And I'm only going to use the income summary account here as a little T. I'm not going to repeat all the T accounts like I did last time. Okay. So we're going to close that to 0. So we want to be debiting our revenue account to close it to 0. I know it feels weird to be debiting a revenue account, but the only reason we're doing that is to empty it out. So that's $74,500, and we're going to credit income summary. It's going to hold that revenue for us. That's its only function, is to hold those first 3 closing entries. And I am going to post into the income summary the $74,500. And this is step 1, the revenue. Okay? Revenue is zeroed out, we're good. Sometimes there's more than one revenue account, not very often, but if there were, you would have to close both of them. The expenses, there's quite a few. Insurance, salary, supplies, interest, and 2 depreciations. So again, I'm not going to make separate T accounts for all of them, but you do have to close each one separately. It's the longest one. Step 2 is the longest because of all the different expense accounts. So this is step 2, close expenses to 0 or to income summary, either or. So we know we're going to debit income summary for a total of all of the expenses. And I've already totaled them up. Again, you credit each one separately. But if you total them up, they only come to $25,100. So you can see we're in good shape in this problem as far as having a net income. The revenue is way more than that, right? So we're not going to have a loss situation. But we do have to close all 6 of those expenses to 0, so I'm going to try to write small. Okay, insurance, expense, and we have salaries expense, I'm going to abbreviate, and then we have supplies, all the usual suspects. And then we have interest. They want to really give it to us in this problem. And then we have the 2 depreciations. Depreciation expense for building, I'll put B. Depreciation expense for equipment. Okay? So I'm going to credit each one of those debits, each one of those balances on the adjusted trial balance, starting with the insurance expense, $1,100. Salaries, $16,400. I'll try to line them up right. Supplies, both $1,100? Too confusing. Make them the same. $2,200 for interest. Depreciation building, $1,800. And depreciation for equipment, $2,500. So we just closed to 0 all 6 expense accounts. Not too bad in fitting it. The total of these 6, $25,100. Again, you have to credit each one separately. Very important. One total can go in income summary, I'm gonna put it in there. Number 2, 25,100. And you can see revenue is a lot more than expenses. We do have a net income. The difference between 74,500 and 25,100, 49,400. That's going to be number 3, which is going to be here. Because that's what you want to see. You want to see the credit side higher for the revenue. So for the third one, step 3, close net income to capital. We're going to increase the capital by net income like everybody wants to do that's in business. Okay, so we're going to debit income summary, and this is going to be the last time we use it for the closing because it's only good for the first 3. For the difference between the revenue and expenses, and that was 49,400, and we're going to credit capital, and this person's name is Boston Capital, so B Capital. Notice capital increasing by the amount of net income, just like it always would. Okay. We're done with income summary. Once I post it, 49,400. Now income summary is 0. Don't need it anymore. Now let's see how much Boston took out. Withdrawal, only 2,200. So I forgot to write step 3. Okay, the last step in the problem, step 4, close withdrawal to capital. And of course, this is going to decrease capital, just like withdrawal always does. So withdrawal has a $2,200 balance. We want it to be 0. So the debit is going to be to capital. I always thought this was the easiest of all the 4 closing entries. You just have to zero out the withdrawal and debit the capital for whatever the owner took out. Credit, B, withdrawal. I wish I would have noticed how easy it is to write when you're sitting down over here, when you're all the way down. Okay. That's it. But what I wanted to show you, even though they're not asking here for it in this particular requirement, if I can just fit somewhere, I can do it with income summary, just to kind of close this out. Let me get rid of income summary because we finished with it. And let me put the capital account up so you can see a picture of what happens to capital when there is a net income. So here's Boston Capital. Okay, well, the beginning balance, I have to look at the book. Oh, I think I wrote it down. I did. $33,000. That's on the adjusted trial balance. I'll put BB for beginning balance. So Boston Capital was increased by the net income in number 3. So it went up by 49,400. This is number 3. And it went down by the withdrawal, a very small withdrawal of 2,200. So you can see this follows the statement of owner's equity. Beginning capital plus net income minus withdrawal equals ending capital. Again, it doesn't say anything about the owner contributing any money, so there was no need to put any contribution in there. Oh, look at the initial. No, that's right. Okay, so what would the ending balance be for capital? When you add the 49,400 to the original 33,000 and subtract 2,200, you get 80,200. Ending capital balance. Right there. Okay? That's a complete 4-step closing process, this time with number 3 being the normal net income way. Okay, so that's it for my explanation of chapter 4. Let me know if you have any questions. I'll see you next time. Bye-bye.